Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. If looking at most of the Asian markets, they've managed to inch much higher. The SGX Nifty is indicating a positive outlook, but nevertheless has come off significantly off the day's high. But we still will see a positive tick if these rates manage to sustain. How did the ADRs pan out in trade? All the ADRs ended with a positive bias. Vedanta was up 4%. Tata Motors, HDFC Bank and ICICI Bank moved up anywhere between 1.5% to 2%, while the IT stocks like Infosys and Wipro also managed to end with a positive bias. How is crude panning out in trade? Yesterday it was rather weak, but it has made off for today's strong opening. So WTI is trading close to the $66 barrel per mark, and Brent is about the $70 barrel per mark. There was a strong close by most of the base metals on the LME. You're looking at it, aluminium was flat in trade, copper managed to inch down, but look at zinc. Zinc was up over 1.5%, lead was up almost 1.5%, and tin was up significantly. So there was strong cues that are happening as far as most of the LME stocks are concerned. There has been strong traction even in China currently. Zinc is up almost 1.6%, and steel is trading up 0.5%. The other base metals are also trading with a positive bias. Now, how did gold pan out in trade? Gold is slightly weak, but the other precious metals have managed to hold on. Flows, big big DII buying that happened in trade yesterday. More than 2,000 crores of net buying happened by DIs. But remember, it's the year ending, so there will be NAV management that will happen. FIs have bought in almost 740 crores in the market. The Nifty was up 130 points, but there was strong traction seen in the mid cap and small cap. The Nifty Bank managed to outperform with a move of over 500 points. The Nifty PSU Bank Index was up and the start of the day it was up almost 5%. The Nifty Media Index was up over 3%. So strong traction was seen as far as most of the banks were concerned. Wix came down significantly given the fact that the markets were rather strong in trade. The other factors is the Nifty itself. It was up 130 points. So basically, if you see, the financials were the only one that majorly contributed to the gains on the Nifty. Oil as well as IT were rather weak in trade. Now, in terms of what happened with the FNO side, so huge amount of short covering was seen both on the Nifty and the Bank Nifty. So 25% open interest drop was seen on the Nifty. The Nifty managed to move up 1.3%. The Bank Nifty also saw significant amount of short covering that came in. Again, it was up almost 2.5%. Now, if you're seeing where positions were taken, 10,000 to 10,100 is where now strong support level is seen for the Nifty, and call writers have started shifting positions to higher levels. Now, if you see what happened yesterday at these levels, 10,000 and 10,100, call writers had to actually cut positions because of the sharp rally on the Nifty, and put writers became much more aggressive. And since it's expiry tomorrow, positions at higher levels were seen getting cut. Now, PCR moved up both for the Nifty and the Bank Nifty given the strong move that we saw on the market. The rollovers have been decent. If you're looking at the Nifty rollover at 40%, and the Bank Nifty rollover is currently at 25%. Now, stock specific, some of the counters that come in the FNO ban. So JP Associates is the one that enters the FNO ban. What goes out of the FNO ban is counters like HDL as well as IDBI Bank. Some of the counters in focus, you had Oil India, which saw a huge amount of fresh short positions that were taken on open interest build-up of almost 18%. You had JP Associates, which saw short covering that came in. Open interest was down almost 12% for the counter. You had Grasim, which again saw long unwinding on open interest decline of almost 12%. And finally, you had MRF, which saw short covering. Open interest was down almost 48%. So that's what happened as far as the FNO markets are concerned. But some important global news is that US President Donald Trump is said to have expelled 60 Russian diplomats. This is in response to the nerve agent poisoning of a former Russian spy in the UK. Kevin Cirilli of Bloomberg News tells us what's in this report.
In addition to expelling those 60 what the U.S. would consider spies, they are also shutting down a consulate in Seattle. This coupled with what happened in the last month of former President Barack Obama's administration, where they shut down a mansion, a Russia mansion in Maryland, as well as an entity in New York. So this is a continuation of that U.S. policy, and this is the most aggressive stance that we've seen taken. Now, senior administration officials telling Bloomberg News that in addition to that, the president ultimately reached that decision after his phone call with Vladimir Putin last week. They did not discuss this on that phone call. We should also note that the president did consult with NATO allies. This is part of a much broader effort on behalf of this administration, and comes at a time in which the intensity surrounding his relationship with Russia is under the microscope, to say the least.
Well, back to local equity markets. Stock of the day is expected to be Venky's India Limited, where the billionaire Cyrus Poonawalla has bought in over 83,000 shares of the company at a price of a little over 3,900. The estimated value with this kind of buy is around 35 odd crore. Poonawalla is listed at 170th on the Forbes billionaire list in 2018. He made it to the list with a net worth of nearly $9 billion, $9.1 billion. And if you look at the shareholding pattern, that's pretty much stable there. Promoter shareholding stands at more than 56%, while that of public at more than 43%. In terms of stock returns, it has been a fairly good run for the company, at least on a yearly basis. The stock has fetched a good return of over 300%. On YTD and on monthly basis, however, it's been a muted performance, with the stock fetching a return of a good 30%. What have been the potential growth drivers behind the company are a strong earning outlook for the company with on lower fears of bird flu, along with good prices of poultry outlook, improved business balance sheets, reduced debt, and expectation of a more cash flow over the next 2 to 3 years.
Let's also look at the commodity cues that we got from overnight and in early Asian hours. So oil is trading higher in early Asian hours after slipping about 0.5% overnight. Now this is on the back of some geopolitical tensions that we got. A rebel group from Iran actually launched a missile attack on Saudi Arabia, and Saudi Arabia has issued a statement saying that it did intercept, in fact, 7 ballistic missiles. As far as the US inventory is concerned, a Bloomberg survey indicates that the US crude oil inventory is likely to surge as much as 9 lakh barrels for the last week. Shifting focus to the base metal space, the LME base metal index in fact closed lower for the third straight day. All metals except for copper closed higher on the London Metal Exchange. So copper was down nearly 1%. That was the third day that it lost ground. But however, if you look at COMEX copper, that has opened with a gain of about 1% odd. As far as other base metals are concerned, zinc and lead gained more than 1% each, while aluminium, nickel and tin closed marginally higher. Now, if you look at the Shanghai Futures Exchange, we can see that most of these base metals have opened with a positive bias, with zinc and steel actually trading more than 1% in the green. As far as the precious metals are concerned, gold and silver did see some bit of uptick on the back of the US dollar losing some ground.
Well, you're tracking a couple of stocks in the back of order wins. It's the year ends, a lot of order wins pouring in. You have Punj Lloyd, which has received an order of 505 crores from the NHAI. You have KNR Constructions, which has received hybrid annuity model projects from NHAI worth 2,964 crores. Dilip Bilkon has emerged as the lowest bidder for road projects worth 4,100 crores. And lastly, Dolphin Offshore has won, a consortium led by Dolphin Offshore has won orders worth 154 crores from ONGC. That apart, we're also tracking Precision Camshafts. Now, they've said that they will acquire 76% stake in a German company. The deal size has not been disclosed, but we will be watching out for this stock. Tata Metallics is another one where they've said the company's operations could be impacted on account of one of the blast furnaces shutting down at the Kharagpur plant. You also have Arihant Superstructures. Now, that's a smaller company, but they've said that they've signed an MOU with CITCO for developing affordable housing projects around the Navi Mumbai airport area. So watch out for that name. We're also watching out for TCPL Packaging on the back of bulk deals, where Wigner Holdings has bought 1.1% stake. More importantly, that was sold by renowned investor Vijay Kedia yesterday. So watch out for that name as well.
The government's gross borrowing for the first half of the financial year beginning April 1 would be 2.8 lakh crore rupees, which is about 47% of the government's total gross borrowing plan for the next financial year. On net basis, the government would borrow about 2 lakh crore rupees in the first half of the next financial year. The government has also decided this time that it would use additional 25,000 crore rupees from the National Small Savings Fund to fund its fiscal deficit, and would reduce the buyback of government securities by rupees 25,000 crore rupees, which would then bring down the government's gross borrowing number for the entire financial year by about 50,000 crore rupees. Now, this would, however, not have any impact on the fiscal deficit, a government official told reporters. The government has also decided that it would come out with shorter term securities in the 1 and 4 year bucket.
The borrowing program announced by the government today has come against the backdrop of a particular market, and that market is well summarized in this one chart. Between last year, at the start of the fiscal last year, and this year, you've seen almost 100 basis point increase in the 10-year bond yield, and the borrowing program today tries to prevent a further upside in these bond yields, which can be very detrimental, not just for the government's finances, but also more importantly for the economy. So the government has done two things. One, it has addressed to some extent the near-term supply-demand imbalance in the bond markets by reducing the first half borrowings, only 2.88 lakh crore being borrowed in the first half, as you know, and that's less than 50% of the total borrowings. So typically they would front-load the borrowings. This year they're actually not front-loading the borrowings in the hope that the second-year market conditions will be a little bit better. The other thing that they have tried to address is the oversupply of 10-year bonds in the market. And Swamijit Neogi of India Rating explained this to us well, said that 40 to 45% of the central government bonds are in the 10-year bucket, and about 70% of the state government bonds are in the 10-year bucket, which then means that this one benchmark bond tends to see a steep sort of change in the demand-supply dynamics when the demand from banks reduces as it has now. So the government has tried to address both the immediate sort of demand-supply imbalance overall in the government bond market, and then the demand-supply imbalance in the 10-year bucket by changing the short-term tenure of the bonds that they are borrowing. They will be borrowing more in the 1 to 4 year bucket in particular, and then in the 5 to 9 year bucket as well. Those are two things that the government has done to address market concerns. Will this mean a short-term downside in bond yields? Yes, most market participants said that tomorrow they should see a positive reaction on the bond yield side. But I just want to caution that do not expect bond yields to come off very steeply, and the next chart will explain why I'm saying this. Now, remember last year, through most of the fiscal year, you had a surplus liquidity scenario. This is the banking liquidity indicator compiled by Bloomberg. This is the neutral line, and anything below that suggests surplus liquidity. So through most of last year, the government was borrowing between 15,000 to 18,000 crore per auction amid surplus liquidity. Still, bond yields moved up. Now you will be in a scenario where they will borrow lesser, 12,000 crore in the first half of the year per auction, but they will be doing this borrowing amidst neutral to deficient liquidity conditions. So while there could be some downside in bond yields, you would not expect a correction all the way back to the levels that we had seen at the start of the last fiscal year. The reason for that being that the liquidity scenario has changed as well. All the demonetization liquidity has flown out. The gap between deposit growth and credit growth has widened. Credit growth has picked up. Deposit growth has come off. So all of that will mean that pressure on bonds, or at least relatively higher bond yields, will persist.
Well, Bandhan Bank will be valued at close to 45,000 crores if it lists at its issue price of 375 crores, and 375 per share, sorry, and that is more than any other PSU bank in the country except SBI. So you look at Bandhan Bank, it is asking for valuations closer to the likes of bigger private banks like a Yes Bank. Market cap would be much larger than even Bank of Baroda and even comparable banking peers like RBL, Federal or IDFC Bank for that matter. Now, if you go ahead, or if you move ahead and if you look at the bank's financials, the loan book and the deposit base has actually the bank has been able to scale those up quite significantly in a period of less than 2 years, from about 12,000 crores. The loan and the deposit base has both nearly doubled to about 23 and 25,000 crores at the end of December. Now, how does that loan book size compare to some of its peer group companies? Well, Bandhan Bank's loan book is smaller than that of IDFC Bank or RBL Bank, but much larger than some of the NBFC turned small finance banks like AU Small Finance Bank, or microfinance institution turned small finance bank like Equitas or Ujjivan Financial. Even if you compare the gross NPA number or the asset quality, that's much more superior as compared to its peers. So Bandhan Bank's gross NPA at the end of December stood at 1.67% as compared to some of the MFI turned banking entities like Ujjivan and Equitas, which were closer to 4 or 5%, and Bandhan Bank's number is closer to the well-performing retail-focused private banks like those of RBL at 1.56%. Even if you compare some of the other parameters, for example, the net interest margin for Bandhan Bank, which stood at 9.9% as of December, one of the highest in the industry. You look at the CASA ratio, the bank has been able to scale up and build a formidable liability franchise in a short span of time. So Bandhan Bank's CASA ratio stood at 33%, in line with what some of the other peers have been able to do, but what something like IDFC Bank has not been able to do. Remember, IDFC Bank and Bandhan Bank both received their universal banking license at around the same time from the RBI, but IDFC Bank's CASA still stands at just about 8.6%. You compare the cost to income ratio, again, that's another USP of this bank. They've been able to control their costs reasonably well. So their cost to income ratios is one of the lowest in the industry. Even the likes of HDFC Bank or IndusInd Bank would have a cost to income ratio in excess of 40-45%. So that's how it compares to some of its peers. You look at the margin return profile, that is also on the superior side. The bank had a ROA of 4.5% and ROE of 28%, and these are FY17 numbers. So post-issue, these return ratios for Bandhan Bank would come down, but analysts still believe it would remain in excess of 20%, and hence they would be much higher than what some of the other peers are doing. Now, let's talk about the valuations, and based on the asking valuation, let's see if Bandhan Bank is probably more like a universal bank or is being classified as a small finance bank. Now, Bandhan Bank's 9-month FY18 based post-issue price-to-book ratio comes to 4.9, assuming it lists at the issue price of 375. Now, that's much higher than what a RBL or even IDFC Bank is trading at. It's also higher than some of the MFI turned small finance banks like Ujjivan and Equitas. On the other hand, the asking valuations are more closer to the likes of HDFC Bank and Kotak Mahindra Bank, although slightly lower than AU Small Finance Bank, which trades at 7 times price to book. So somewhere in the middle of their entire banking portfolio. Now, if you look at the possible listing scenarios, dealers are saying that it could list at a premium of about 35 to 40 per share. That means it could list somewhere around 410 to 415. Now, if we just assume that it lists at 400, it would mean implied market capitalization of 47,700 crores and a price to book ratio of 5.2. And if it were to list even more higher at a price of say 420, it would mean an implied market capitalization of 50,000 crores, and the price to book value ratio would turn out to be 5.5, which is a lot more expensive than the ratio at which HDFC Bank also trades. So definitely it would be a pricey IPO. But with that, let's also talk about another primary market issue, ICICI Securities, which has decided to lower or bring down its issue size, and Sajith Mangat has all the details in this report.
Thanks, Shweta. ICICI Securities IPO closed on Monday. The entire issue was undersubscribed to the extent of 10%. The issue, total issue was subscribed by nearly 88% or so. That was primarily because the retail and HNI portion was remained undersubscribed. The QIB portion was subscribed 1.04 times, while the HNI was undersubscribed or subscribed only 36% of the portion, and the retail was subscribed only 88% of the portion. As a result of which, the total IPO was subscribed 88%. 10%. The bank, the offer for sale by ICICI Bank would be raising nearly 3,500 crores. That's primarily 500 crores short of expectation, but the issue was closed because since it was an offer for sale, the regulations very clearly state that the issue can be closed as long as the issue is able to dilute 10% of its postpaid equity capital. The entire issue is now expected to be completed within the next few days, and ICICI Bank expects that the listing also will happen sooner. So the allotment is expected in the next 2 days or so. That's what we understand.
ArcelorMittal India has decided to go to the NCLT challenging the Essar Steel lenders' decision to call its bid ineligible. According to ArcelorMittal's statement that came out on Monday, the company is trying to protect its rights under the insolvency and bankruptcy process to bid for Essar Steel. The problem started because ArcelorMittal was classified as a promoter for Uttam Galva Steel, which is already a stressed company, an NPA company with a number of banks. According to an amendment that was brought in by the government in November 2017, any promoter of an NPA company cannot actually bid for an asset under the insolvency process, which essentially means that ArcelorMittal would be barred from participating in any process. But in its statement, ArcelorMittal claims that it has received some kind of confirmation from the stock exchanges declassifying it as a promoter for Uttam Galva Steel, which means that it is still eligible for this entire process. Remember, ArcelorMittal's move comes in right after what happened with New Metal. New Metal, which is the other bidder in the Essar Steel case, had filed a motion at the NCLT in Ahmedabad seeking some kind of declaration of eligibility from the NCLT in the Essar Steel matter. The petition claims that New Metal's application or New Metal's submission of resolution, its submitted resolution plan has not been adequately assessed by the resolution professional involved. Therefore, New Metal is trying to get some kind of intervention from the NCLT. The NCLT on its part ordered that the resolution process can continue as it is going on according to the regular timelines, but that whatever NCLT decides in this matter will be binding on the lender's decision, which will be taken out later. On the 2nd of April, that is when the lenders have called for rebids in the Essar Steel case, and it is said that all 6 participants who had originally submitted the expression of interest would be asked to submit a fresh plan by that time.
Let's also look at some of the stocks that were in action yesterday and saw some delivery buying and selling. The first stock to watch out for would be Cadila Healthcare. Now that was up in trade nearly 5% as of yesterday and saw delivery volume surge more than 3 times at nearly 29 lakh shares as compared to its 5-day average, and the total volume surged just about 3 times at nearly 47 lakh shares as compared to its 5-day average. The second stock to watch out for, that would be Aarti Industries. That was up nearly 3% and saw delivery buying in excess of 100 crores. The delivery volume actually surged just little less than 3 times at nearly 11 lakh shares as compared to its 5-day average, and the total volume surged about 231% at nearly 11 lakh shares as compared to its 5-day average. The last and final stock to watch out for, that would be Canara Bank. That was up more than 10% in trade and saw delivery buying of more than 50 crores. The delivery volume surged nearly 3 times at about 20 lakh shares as compared to its 5-day average, and the total volume surged about 63% at nearly 1.8 crore shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Antique on Future Consumer. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 85, which suggests a potential upside of 60%. Now according to the brokerage, Future Consumer has a strong play on the global trend of rising share of private label in foods. Now Future Consumer is expected to benefit from its differentiated, innovative product offerings and presence in categories where the competitive intensity is low. Expansion of Big Bazaar and Easy Day stores is expected to remain the biggest growth factors for the company going forward. Also, the company's focus is expected to remain on high margin portfolio, and along with that, new launches in emerging categories provide a huge growth opportunity for future consumer. Now, the brokerage is expecting the company's revenue to grow at a compounded annual growth rate of 46% over FY17 to FY20, and over the same period, it is expecting the company's margin to expand by 480 basis points. And this strong margin expansion will provide good earnings visibility for future consumer. Lastly, it says that future consumer is still in nascent stages of growth cycle, and the key driver will be revenue growth backed by distribution expansion. Second, we have a Citi on Voltas. Now, the brokerage has maintained its buy rating on the stock with a target price of 744. Now, according to the brokerage, the Indian AC market is at an inflection point. Now, Daikin, which is a formidable competitor for Voltas, has set aggressive growth targets. It plans to double its top line to 6,500 crore by FY20. Also, Daikin is planning to invest around close to 600 crore rupees to set up a third plant in India. Now, the brokerage also points out that Daikin has been a front runner in the R&D spendings. However, though Daikin is a strong competitor, Voltas has successfully defended its turf in the past and should be able to do the same going forward. Lastly, it says that Voltas is the top pick in Indian consumer electrical.
Yeah, I think there were probably some people in Beijing knew he was coming, because he did have to take that train, which is quite a unique train, very similar to the one that his father used when he made trips to Beijing. He had to cross the border there at Dandong from North Korea into northeast China and then on to Beijing, where they park it at the Beijing railway station. So it's kind of conspicuous. You can kind of tell a high-level official from North Korea is coming. What we don't know for sure if it is in fact Kim Jong-un, but three people close to the situation can confirm that the North Korean leader is in Beijing. Why would he go there now? Well, of course, ahead of the potential or the possible summit, if you want to call it that, with President Trump at a location yet to be determined. The Chinese obviously don't want to be left out of the consultation phase of this, and also they want to kind of gauge from Kim Jong-un what his strategy is in going to talks with Trump and what he wants from the United States, whether he is sincere in his pledge, of course, to that he's willing to abandon his nuclear weapons program. But it is an interesting new twist in what is becoming a very interesting saga with the potential meeting as well between Moon Jae-in, the South Korean president, and Kim Jong-un coming up slated for early April.
Well, global geopolitical updates, ongoing negotiations on trade between the US and China, and of course the recent bounce back in the equity markets. Lots to look forward to on Bloomberg Quint Live, but there's also a lot on the website that you can look at. First up, markets regulator SEBI is planning to give exchanges the power to freeze promoter shareholding and even dealer shares of defaulting companies that fail to comply with the regulator's listing conditions. The plans will be discussed at the board meeting of the Securities and Exchange Board of India this week, according to senior officials. Facebook chief executive Mark Zuckerberg was invited to testify before the Senate Judiciary Committee next month by Chairman Chuck Grassley as questions mount over its data privacy practices. Well, that's all you need to know going into trade today. Up next is Indian Open, and that will take you through market open. That's all. Thanks for watching. This is Bloomberg Quint.